The headline flashes on a phone screen. Gold hits another record high. You close the app. Open it again a minute later. The numbers are still red. Something on the radio mentions debt and interest rates. You are only half listening until one word cuts through: gold. And suddenly this old metal feels strangely close. You are not a gold trader. You have never bought a single ounce, but somehow the word keeps finding you, in headlines, in conversations, in the quiet back of your mind when you check your savings and something does not quite add up. You have seen this before. Every time something shifts in the economy, gold shows up, not as a solution, just as a signal. And most people look at it and ask the wrong question. They ask, why is gold going up? But that is not what is actually happening. Gold is not really going up. Something else is going down.
Gold is not an investment in the traditional sense. It is a measuring instrument, and what it measures is not value, it measures trust. At first glance, gold should not be this important. It pays no interest, it generates no dividends, it does not build factories, write software, or create cash flow. And yet, people, banks, and even governments still treat it as something special. That is the real story. To understand why, you have to reduce gold to its simplest form. Money only works because people believe in it. A banknote is ultimately just paper. A number in your bank account is ultimately just a digital entry. Both work because all of us agree they have value. Gold works differently. Gold does not need a central bank signature, a server, an app, or a government promise. It is simply there, scarce, physical, limited. Think of it like a thermometer. A thermometer does not create heat or cold. It does not make you sick, and it does not heal you. It simply reads what is already there. Gold works the same way. When gold rises, it is not telling you that gold has become more useful. It is telling you that something in the system has shifted.
That is also why gold became so powerful in the first place. It does not rust. It is rare. It can be divided. It is relatively easy to recognize. And most importantly, it cannot be created in unlimited amounts. Paper money can be printed. Digital money can be expanded with a few decisions. Gold has to be mined. That makes gold slow, but that slowness is exactly what makes it a reliable instrument. A thermometer that changed its own reading depending on who was holding it would be useless. Gold cannot do that. No government can order more of it into existence. No central bank can expand it with a policy decision. That is why it holds its position as a measuring point, even when everything around it moves. For a long time, this idea was built directly into the monetary system. Currencies were at least partly linked to gold. Then came a turning point that changed everything. In 1971, the United States, under President Richard Nixon, ended the convertibility of the U.S. dollar into gold for foreign governments. The link between the world's most important currency and the world's most important measuring instrument was broken. From that moment on, something fundamental became visible. Modern money depends on management. Gold does not. One system can be expanded. The other simply sits in a vault and keeps reading.
And that is where the real mechanism begins. When people trust the system, the thermometer stays quiet. Money flows into businesses, stocks, innovation, and growth. In those times, people want returns. They want expansion. They want the future. But when that trust begins to crack, the reading changes. And this is the strange part. Nobody decides one morning to stop trusting money. It happens slowly, and then all at once. Imagine you have been saving for 3 years. The number in your account has not changed, but what that number buys has. That is not a market problem, that is a trust problem. And gold has been reading it the whole time. When banks look fragile, cash feels safe, until you remember it still depends on institutions. When governments keep adding debt, markets quietly start asking whether stability was ever guaranteed to begin with. A bank statement, a central bank press conference, a government budget, each of these depends on one invisible ingredient: trust. And gold is the only asset in the room that does not. Gold does not rise because gold itself has become more valuable. Gold rises because the thing it measures is falling. And that shift does not happen somewhere abstract. It happens inside your own finances. Where does your wealth actually sit when trust becomes scarce?
That is why gold is often called a safe haven. But there is an important misunderstanding hidden in that phrase. A safe haven sounds like a calm place. Gold is not always calm. It can be volatile. It can fall sharply in certain periods. What makes gold different is not stability of price. It is what the instrument depends on. A stock depends on a company. A bond depends on a borrower. Cash in a bank depends on the banking system. Physical gold depends on the simple fact that it exists. It carries no classic counterparty risk in the same way most financial assets do. The instrument is not part of the system it is measuring. That is the crucial point. A thermometer that was itself made of the fever would not be very useful. Gold stands outside, and that is what makes it readable when everything else is moving.
If you want to see how modern this ancient instrument still is, you only have to look at the present. In the last few years, gold has not faded into the background. It has moved back into focus. Gold prices have reached fresh record highs, and central banks around the world have continued buying large amounts of it. That may be the most important modern signal of all. In a world of apps, high-frequency trading, exchange-traded funds, digital currency debates, and artificial intelligence, governments still keep gold in vaults. Not because of nostalgia, but because gold remains a reserve asset outside the promise of any single government or financial institution. Officially, the modern economy no longer runs on a gold standard. In practice, the instrument is still on the wall. Nobody has taken it down. That does not mean gold is a perfect investment. Quite the opposite. Gold pays no income. It produces nothing. In long periods of strong economic growth, it can lag far behind stocks. If your goal is pure growth, productive businesses are usually the stronger force. Gold is not an engine. It is not a turbocharger. It is not a return machine. Gold is not growth. Gold is protection. It behaves more like a seatbelt than an accelerator. Nobody buys a seatbelt because it makes the car go faster. You are simply glad it is there when something goes wrong. That is the core insight many people miss when they look at gold. The wrong question is, will gold make me rich quickly? The better question is, what is the instrument telling me right now? And the follow-up question is, what does that mean for my wealth? When gold becomes expensive, it is rarely just a story about gold. It is a story about inflation, debt, uncertainty, and the quiet question of how stable the foundation really is. Gold is not a replacement for everything else. It is a counterweight, a calm signal in a system that increasingly depends on debt, confidence, and policy decisions.
Gold is not paper money. Gold is distrust money, and that is why it still matters so much. Not because it has become more modern than other assets, but because the modern world keeps creating moments when people realize how much everything else depends on trust. The more digital, complex, and debt-driven a financial system becomes, the more remarkable the role of an asset that has carried the same reading for thousands of years, limited, physical, and not easily expanded. When you look at a gold price chart, you are not really looking at gold. You are looking at a reading, and that reading is usually telling a bigger story than it seems. That is why it makes sense to stop looking at gold as a shiny metal and start reading it for what it is, a thermometer for the system. If this changed how you think about gold, there's more here in the same spirit. And if that kind of clarity is useful to you,
Subscribing is the simplest way to stay with it.